Crypto profits are great until tax season hits. HMRC is paying more attention to crypto now than ever before, and if you think that your gains are flying under the radar, you may want to think again, because whether you're a casual investor, a day trader, or just staking tokens, it's crucial to know what's taxable and how to stay compliant. So in today's video, I'm going to break it all down, how crypto tax works in the UK and what HMRC expects from you. So what exactly does HMRC tax when it comes to crypto? Well, pretty much every transaction could trigger a taxable event. So selling crypto for fiat currency, like selling Bitcoin for pounds, is taxable. Swapping one crypto for another, say trading Ethereum for Bitcoin, is also taxable. And then if you trade them back again, that's also taxable. Using crypto to pay for goods and services, that is also a taxable event. And even gifting crypto to someone who isn't your spouse could result in a tax bill. Why? Because HMRC treats these activities as what they call capital disposals, and it's just like selling shares or property. Every gain that you make on these transactions could be subject to capital gains tax. Now, capital gains tax, or CGT, is what you'll pay on most crypto profits. And the tax-free allowance for 2025 for an individual is £3,000. So once your gains go above that, the tax is going to kick in at around 18% for basic rate taxpayers and 24% for higher or additional rate taxpayers. So let's say you bought Ethereum for £5,000, and then later sold it for £12,000. That would be a £7,000 gain. And so after deducting the £3,000 allowance, you'll pay tax on around £4,000. And if you're a basic rate taxpayer, which will be 18% of £4,000, which is £720. And then for higher rate taxpayers, 24% of £4,000 would be £960. So that's what you're going to have to cough up. Now, crypto losses can reduce your taxable gains. And if you've made a £3,000 loss, let's say on another token in the same year, that could actually wipe out your gain entirely and end up saving you a quite hefty tax bill. And capital gains tax isn't the only thing to worry about. Depending on how you earn your crypto, you might actually fall under income tax rules instead. So things like staking rewards, these are considered income actually. And so if you're staking tokens and earning rewards, those rewards will be taxed at your income tax rate, which could be 20%, 40%, or even 45%, depending on your bracket and how much you're earning. There's also crypto mining. Now, mining profits are also taxed as income, and the expenses for mining, like electricity, equipment, can actually also be deducted. But you're going to need detailed records to claim them. And another one that many people don't think about is airdrops. And these are a bit trickier. You know, if the airdrop is part of a promotion or a reward for participating in a project, it's taxable income. However, if it's a real freebie, shall we say, with no conditions, and you don't have to do anything for it, and you never had to do anything for it, they're just airdropping it and giving it to you, then it might be exempt. But I mean, even those situations on their own are quite rare. And so by now you're probably wondering how to report all of this to the HMRC. Well, first you're going to need to submit a self-assessment tax return. And the key date to remember on this is the 31st of January for online submissions. You're going to have to calculate your total capital gains for that tax year, deduct your losses, of course, and then apply this £3,000 allowance. You can do all this by logging into the HMRC portal and then fill out this capital gains section. Now, for staking and mining income, it actually falls under this what they call other income section on your tax return. Now, keep in mind though that HMRC expects you to have the detailed records of every transaction. So this is dates, amounts, the crypto involved, and also the market value in pounds at the time of the transaction. Now, I know what you're thinking. Keeping records is really boring, but it is absolutely essential. HMRC is ramping up its efforts to track crypto transactions now. They're using things like AI, and many exchanges are also sharing data with HMRC. They've got a special agreement in place where HMRC can literally just pull data from exchanges, from UK exchanges, that is, whenever they want. And there's even loads of tools like crypto tax calculators now that can save you hours and hours of work by tracking your transactions across multiple exchanges and then automatically calculate your gains. And some of the most popular ones are CoinTracker, Coinly, and Crypto Tax Calculator, if any of you ever heard of any of those. But also, equally, don't forget to track your losses, because it might not feel great at the time losing money, but it can actually significantly reduce your tax bill later on when if you need to offset your gains. So let's talk about mistakes, because there are a lot of them when it comes to crypto tax. People make mistakes all over the place, and it can be expensive later. So here are the most common ones. Firstly, not reporting small gains. Some people think that small amounts don't matter. I can tell you that HMRC does not think that's the case. They do matter, and they can still penalise you if they find unreported gains. Another one is forgetting about crypto to crypto trades, because remember that swapping one crypto for another is taxable. And lastly, relying on exchanges for complete records. My advice is always keep your own records. Exchanges can lose data or fail to provide everything when HMRC requires. And if HMRC finds an error, you will be the one that could end up facing penalties. It can start with fines and then interest, and it can end up escalating into legal action, in extreme cases. So I guess what I want you to take away from this video is really that crypto tax doesn't have to be a nightmare, but you need to stay informed and stay organised. Take the time to understand the rules, read up on it, do your research, track your gains and track your losses, and you'll avoid unnecessary stress and penalties later down the line. So if this video helped clear things up, don't forget to like, subscribe, and hit that notification bell. I'll keep you up to date with everything that you need to know about crypto regulation in the UK, and I'll see you in the next one.